you have seen markets, financial markets across the world. So, what big thing you think is coming up for India next?
Personally, getting too excited about one stock and putting too much money in it was a painful lesson.
They are focusing on their career building in finance as well, but many of them doesn't want to take risk.
If you are lucky enough to find a mentor, that is good.
Okay.
Everybody cannot be a mentor. You have to find the right mentor also. You have to actually choose a mentor. You have to locate a mentor. And if you can locate one, that is good.
But how is it different in the US and India?
If you allow your money to compound for 30 or 40 years, okay, you will realize that the interest on interest is your greatest earning.
Okay.
Save first, na? Only then you can invest.
Okay.
The habit of saving is extraordinarily important and regular, not once in a blue moon.
Welcome to Risk and Reward Corner, the ultimate podcast for traders, investors, and financial enthusiasts, brought to you by CityIndex. So, today we have with us Mr. Rajendra Belgaumkar, founder of Seneca Consulting. Hello, sir. Welcome.
Good morning to you. How are you?
I'm good, sir. I'm good. How are you?
Good. Good. Thank you.
Can we have a small intro about yourself and the business?
Yeah. So I'm the founder, principal of Seneca Consulting, which I founded in 2017.
Yes.
I'm a little older, so my history goes back long. I did my engineering in Belgaum, did my MBA in the United States, stayed there for 17 years. I worked in the financial field in risk management.
That's
then
great.
in 2005, I came back to India. And since then, I've been having a ride in Belgaum. So that's me.
Yes. So you are the perfect person we have chosen for the risk and reward con.
The kind of
We will be encountering some risks and rewards further.
Sure.
So let's start from the beginning.
Sure.
What first draw you to the finance world?
Okay. Interesting question. You may get a long answer. You can edit it afterwards.
Yeah. Sure.
But I was born in a middle class family, and the goal ultimately was to have a professional degree, either medicine or engineering.
Okay.
And I landed in engineering, and I ended up in finance, as I told you.
Okay.
But funnily, during those college years, in newspapers at that time, you used to get these ads for fixed deposits.
Okay.
From many companies. So they used to be very interesting ads for a person who did not know much about money or finance. So 8% interest, 12% interest, 14%. That used to pique my interest. I used to follow those companies. And during my engineering years, a professor told my father once, whatever we are doing, ultimately Raj brings it to finance.
Okay.
So that somehow told me something that I may have some interest in finance. And at that time, during my college years also, my father went to Kuwait for our family. And then I used to manage the money here with my mother. Okay. And that made me interested in what else can be done with money other than fixed deposits and other than those company deposits. And that is what got me interested in understanding about companies, the personalities behind those companies. That is where I made my first few investments on behalf of my father.
Okay. When was that?
That we are talking now ancient times. Around 1984, 85.
1984.
Okay.
That's great.
But those were individual stocks. At that time, I could not buy a stock in Belgaum. I used to send the money to Bombay, and then my uncle
Buy the physical.
would buy the stocks on my behalf. He used to send money through this system called Angadiyas. In Shahpur, you can give them money there, they will deliver it there tomorrow.
Oh, okay.
So I used to use that. So that is what got me interested in finance. And as I finished my engineering, I realized that is where I'm really interested in.
Okay.
And that is where my father finally said one thing: you make sure you get into a good school in India, then I will fund your education abroad.
Okay.
That
Okay.
is how it
That's
happened.
crazy.
Yeah, yeah. So that's what got me interested in, kind of, it
Finance.
grew organically.
Yeah. Yeah.
And then I,
So once you see a news or something and you actually do there
yeah,
automatically.
yeah. And I used to read a lot of newspapers. There was no internet then, there
Yeah.
was no social media then. So reading the Times of India was a passion.
Yeah.
Reading newspapers was a passion. So you pick information, you pick
It's amazing.
information.
Yeah, that's amazing.
That's
Sir.
what happens.
So ultimately, it's like finance is the ultimate goal. I guess like whatever we do in life, we end up like we
Yeah,
have to get good finance.
whether we like it or not, finance enters our life.
Yes,
In a
exactly.
good way or in a not so good way,
We have to manage.
it is very important. It has
So we can say,
pay
is it a life skill?
it is a life skill that is, I don't want to prefer advice, but I have felt that everybody should know a little bit about the basics of finance.
Yeah.
Because otherwise, even when somebody is offering you advice, let us say,
Yeah.
you should know how much to take and what not to take.
Yes. Yes.
So
Exactly.
that basic innate sense needs to be developed, related to finance.
So everybody must learn.
It is a life skill, like you said, very rightly said. It's an extraordinarily important life skill, and it will actually help you.
So how did working in these two different financial environment shape your approach to risk?
Okay, so interesting question. I got into finance, like I told you, and it turned out that after I got into the field of finance, risk management became my core competency.
That's right.
So working in finance, I used to work in the field of banking.
Okay.
So it is not like we made investments in stocks and all. Whatever investments were made in stock and all were my personal investments.
Okay.
But the field of risk management was extraordinarily important to shaping my thinking about finance.
Yeah.
Because in finance, one thing I realized was there is no certainty. So you have to think in probabilities. This stock is good.
Yeah.
This stock is bad. 100% one cannot say.
Yeah.
There is a probability that the stock is good. There is a probability that the stock is bad.
Yeah.
Another important influence in my life during my finance days in New York, and studying finance, portfolio theory was a very important concept.
Okay.
Now, this is something developed by a professor called Harry Markowitz.
Okay.
I have actually seen him. He used to, after his retirement, he used to consult with Baruch College where I did my MBA.
Okay.
And one of the essences of that theory is you need to diversify your holdings.
Okay.
Like you say, you refer in school you hear na the famous English proverb: don't put all your eggs in the same basket.
Yes. Yeah.
Okay,
That's right.
the example I can give you of that is, say you are working for an airline
Okay.
and you put all your investments in an airline stock, the same airline stock. Okay, what happens? We hope that the airline does very well,
Yes. That's right.
but there is a probability that it will not do well.
Yeah.
We know of airlines that have not done well. So, if you have, from a risk management perspective,
Yeah.
you are doubling your risk. Not only is your job at risk potentially,
Yeah.
okay, but your investments are also at risk.
Okay.
So, when you think from a risk management perspective, you diversify. I mean, it doesn't mean you buy 10 pharma stocks.
Okay.
You buy some pharma stocks, you buy some construction stocks, you
Yeah.
buy some technology stocks.
That sounds great.
So that is what don't put your eggs in the same basket means. Okay. Then you diversify across sectors also. Okay. So that is what I learned from the foray into risk management, where we were positioning our balance sheets,
Okay.
our entire balance sheets, to rising and falling interest rates. So then we had to layer in instruments on top of the balance sheet like swaps, derivatives, some interest rate options.
Yeah.
So, but then you transfer it to your own personal portfolio.
Yeah.
You learn the same kind of things when you are managing your own portfolio, that you need to manage it from a risk basis, that you're on a portfolio basis, not on a single stock basis.
Oh, okay.
That was one of the most important lessons that was ingrained into me because of my profession.
Okay, okay. But how is it different, like in the US and India?
The color of money is green across the world.
That's true. That's
So the principles of risk management are the same.
Okay.
The Indian market is not as large as the US market. The US market is huge, the scale of it, the size of it. So there is a lot of maturity in that market. But it also means, in a reverse way, there is a lot more opportunity here,
okay.
because the Indian economy is at a different stage
Growing.
of its eventual destiny.
Yeah.
So there are far more opportunities, but you have to manage the risks even better here, because a lot of fund flows into the Indian market tends to affect the Indian market.
Okay.
So at such times, you have to have long-term faith in the market.
Okay.
So if you get worried by today's stock price move, tomorrow's stock price move, you should not be in the
It
market.
doesn't make sense. Yeah.
Okay.
That's right.
So unless you can sleep well at night due to movements in the stock market, you should not invest in the stock market.
Yeah. There needs to be
Or,
some patience.
or you hire a portfolio manager, give him or her that money, and check your returns once a month, once a quarter.
Yeah.
But if you are the kind of person who needs to check it every 5 minutes, probably
There is a problem.
investing by yourself is not for you.
Yes, yes, yes. That's right. So patience is the key.
Patience is extraordinarily important. Sense of probability is extraordinarily important. Sense of portfolio diversification is very important.
Yeah.
Reading up on companies, understanding companies, character, capacity, and collateral. These are the 3 C's that are extraordinarily important in investment. You have to understand the character of the management.
Okay.
You have to understand the capacity of the company.
Yeah.
And what is the underlying of the company, the hard underlying assets of the company. It may be IP, it may be properties, it may be buildings, it may be factories. So those 3 C's are quite important.
After a successful career in US, what brought you back to India, Belgavi especially?
I get asked this question in 2 ways.
Okay.
One is, okay, you did a great thing, and more often than not, why did you do this?
Okay.
The reasons are very personal and very selfish.
Okay.
I wanted to be in India at this stage of my life.
Okay.
I wanted to raise my kids in the Indian context.
That's beautiful.
And again, very selfish reasons. I have, one of the dictums of my life is, I never try to tell people what they should do. That was good for me.
Absolutely right.
It worked for me.
Yeah.
Okay. And luckily, I was fortunate to have a wife who, despite growing up in New Delhi and then spending 17 years in the US, was still ready to come to Belgaum.
When was it when you returned back?
We returned back in 2005.
2005. Okay.
Yeah, so it's now about 20 years. May 10th, it was 20 years.
That's really nice.
Yeah. So that is since and luckily our children were at an age where they could assimilate into the Indian context. My son was 5.5, my daughter was 2.5.
Okay.
So because the younger they are, there are greater chances, greater probabilities of assimilating within the Indian context. There are many who bring their children later, and unfortunately in those situations, those children cannot adjust. You can't blame anybody. So we wanted to raise our
personal choice.
Yeah, it was personal choice, but we also needed to give ourselves a chance.
Yeah,
so
that's right.
It worked out that way.
So that's amazing.
Yeah.
For young professionals and entrepreneurs, what are the common mistakes you see them making as you mentor them?
So let us think of it this way.
Yeah.
There is money coming in. One of the things that young people don't realize, many of them, not all of them, but many of them, that compounding, which is called the eighth wonder of the world. I think
Yeah.
Albert Einstein said that.
Okay.
Okay. It's one of the greatest forces in money management. So let's say you are making 10% per year.
Okay.
Okay. But let's say you are making it for 5 years.
Mhm.
So 10%, the interest on 10%, that is now compounding for 4 more years.
Okay.
Then the interest on that first 1,000, 10% in the first year, it earns something in the second year, so on.
Yeah.
Okay. If you allow your money to compound for 30 or 40 years,
Okay.
okay, you will realize that the interest on interest is your greatest earning.
Okay.
Okay. So the power of compounding, and I'm not talking of fixed deposits here because I'm talking interest. I'm
Yeah.
just using that as an example.
Okay. Got
But when your money gets to earn rates of return from the market also, your earliest money saved becomes your greatest friend in life.
Oh. Oh.
Okay. So the power of compounding, the realization of that is the greatest learning that one can take early in life, but can be the greatest mistake if not learned in life.
Oh. So you want to say that it is the most neglected part?
It is the most neglected part, which is why starting to save early
Okay.
is very important.
Yeah.
Okay. You cannot say, oh, I will start investing then, I will start saving then. No, keep saving.
Yeah.
Okay. Keep investing. That is very, very important. That is a mistake that people should not make, but tend to make. Suddenly waking up to, I need to invest. Okay. So that's one thing. Another mistake that people do make when they realize that they have to invest,
Yeah.
over diversify.
Okay.
Diversification beyond a certain point is meaningless. So let us say,
Like there can be a count.
well, let us say, having, if you're investing in individual stocks, this is based on my experience, this
Yeah.
is not advice. Say 30 to 35 stocks is something that is optimal.
Yeah.
Okay.
So you can keep a track of.
You can keep a track of those stocks as long as they are diversified.
Hmm.
Instead, you say, oh, to protect myself, what I will do is I'll invest in 30 to 35 mutual funds.
Oh. Okay.
Multiply each of those mutual funds by the number of stocks they invest in. Now you are diversified, over diversified.
Yeah.
You are better off buying the index.
Yeah.
By the index, you are getting the same thing.
Same thing.
So, not saving and investing is one thing that could be an error, but then having invested, over diversifying also could be an error.
Okay.
Okay. So this would be my short, I call it short answer to your question.
Okay. Okay. I just wanted to know that you have been mentoring the entrepreneurs, right?
Yeah.
Today's generation entrepreneurs. So,
Correct.
I guess I have interviewed some of them,
Yeah.
like they were the podcast guests, and most of them just want to get into business so that they want to do something.
Correct.
But then they're not very much focused on the investment part.
Mhm.
Like, how do you see them making a particular mistake, like repeated mistake from all the entrepreneurs kind of thing? Like, have you noticed something like that? Or they come up with a problem to you?
Okay, it's a very broad question. I'll try to answer it in parts.
Okay.
First of all of us should be very proud that somebody or a group of people is making an effort to go away from the norm and
Yeah.
to do something that they normally would not have done.
Yeah.
The ideal situation would have been, they would have been doing a job and satisfying their
Yeah.
parents and saying that I have done what I was supposed to do. So to be an
This
entrepreneur,
is the untraveled road.
untraveled road, to be a startup founder, it's a tough journey to undertake.
Yeah.
But in undertaking that tough journey, sometimes, not all times, entrepreneurs may overlook certain things that they need to add to their portfolio of attributes.
Yeah.
A lot of times, having a co-founder is very important.
Yeah.
Because you need to bounce off your ideas.
Yeah.
Okay. You need
Brainstorming.
brainstorming. Exactly. You rightly said. So it's like saying that I have an idea, I feel it is good, but I need somebody to validate it or to question it.
Along. Mhm.
Okay. So that is one thing. The other thing that needs to be done is ultimately when you want to grow,
Yeah.
okay, you have to get money from outside in.
Yeah.
How long can you bootstrap?
Yeah.
Unless it's one in a billion idea, okay, which will get picked up.
Yeah.
You have to, at some point, allow good money to come in so that you hit the next level of your growth. And that is where um, sometimes founders can get very emotional about their idea and not understand that when somebody wants to part with some money to help your venture grow, that person has multiple options. You are one among many people who are approaching him.
Right, you said.
Okay. Therefore, your ability to state and pitch, which is what normally happens, your idea in such a way that you are seen as very responsible owners of that idea.
Yeah.
You have done good work before, that you are a believable person.
Yeah.
Okay. And that you have a plan to stay with that idea until it reaches its maturity.
Yeah.
That sense of belief, because what do you get? 15 minutes, 20 minutes, 30 minutes if you're lucky to pitch an idea among 10, 20 people.
Yeah.
So you have to be able to crystallize your thoughts into a very presentable idea, okay, answer questions. And that is an area where couple of founders don't seem to pay attention to.
Oh.
So that was one area I would very much request founders and people pitching for money to be focused on, because you have to think of that person. That person is parting with his hard-earned money for you.
Yeah, that's right. So it might be just an option for him and
Yeah.
everything for you, the founder.
So making that pitch very, very sensibly is very, very important.
And Chris.
Crisp, and but the key points have to be made.
Yeah.
And it's in the Q&A that you have to really expound on it further.
Okay. Hi, many of our listeners are students or they are starting up their careers.
Okay.
So, how can they build up their confidence in managing their finance or starting their financial journey?
This is probably the most important question.
Yeah.
First is recognition of the realities around who you are.
Yeah.
You have to believe most of us are not blessed with fortunes behind us.
Yeah.
Okay.
That's right.
So that should tell us that if we want to do something in life, building security, building a plan for the future is extremely important. Thinking about your future in certain kind of configurations is very, very important. But one key aspect of anything that you do is, if you are in, see, there are two types of people.
Yeah.
One is people who become entrepreneurs, they are ready for delayed gratification.
Okay.
Okay, so they are managing their own businesses, they are going to make some money, but a lot of money hopefully later.
Yeah.
They are a different scenario.
Yeah.
But for those among us who are into jobs, into salaries, into progressing in our careers, one very, very important thing, like I said earlier, is to understand that money has to be saved. You cannot behave like a cashier at a bank, counting in millions and taking money home in hundreds. Okay, whatever you earn, and you can't say I'm earning less.
Yeah.
Okay, whatever you earn, some portion of it has to be saved. Is a very, very important lesson to imbibe in your daily being. Okay. Second, a lot of people don't realize that health is an extremely important asset. You have to view it as an asset for your long-term stability in your career.
Yeah.
Third, you need to network along the way. It's just not showing up somewhere and saying, "I am so." Who are you? It's about building relationships.
Yeah.
Networking is extremely important in building a career as much as finances.
Exactly.
Okay. And fourth, keeping your eyes and ears open by reading.
Yeah.
Reading has become a lost art.
Yeah.
I may sound very old because I'm saying it, but you cannot deny the role of reading. One of the big mistakes that many people are beginning to make is whatever I need to know,
Yeah.
I can find it. Social media is there,
Google and
Google is there, Perplexity is there, Chat GPT is there. But the question is, when you are making impressions on people, you can't be doing Chat GPT as you are talking. Oh, what did you say? I'll find it. What did you say? I'll find it. That is not how life works.
Yeah,
life
exactly.
works on people on the other side believing that you know
something. Yeah.
Okay.
You have to build.
You have to build confidence in people, and that comes through reading.
Yeah.
Reading is an extraordinarily important part of life. You cannot be lazy and say, I can find information when I want it. Then it might be too late to find that information.
So I have seen these younger generations, like younger.
And I don't want to castigate them because they are so good at what they do.
Yeah.
But the point of preparation in life has not gone out of style.
Yeah, that's absolutely right.
So you have to be, you can't have a conversation via something plugged into your ear which is constantly telling you what you should say.
Yeah.
So
nowadays, like the one we are doing, the podcast. So nowadays people are viewing podcasts. They listen to podcasts while they are driving, they are going somewhere. So there are many ways they are getting knowledge.
So use technology to the hilt.
Yeah.
I would absolutely say
get knowledge.
But become somebody. Everything cannot be outside of your brain.
Yeah.
So that is what I would say, that if they can focus on that, many of them, and I'm not saying all of them, it's a very important asset to have, the ability to have your own thought. It's like watching a TV show where the host is telling you what the issue is, but furthermore he's telling you what to think about it. Okay. Instead,
we must have our own opinion,
or you should have a habit of building your own opinions.
Exactly.
So that is what I would advise.
Okay, building on to this, what you have answered, like, okay, they are focusing on their career building in finance as well, but many of them doesn't want to take risks. So what do you want to say about it? Yeah. Like, basically, okay, let me say that parents who are into business, if they have taken some loans and they have been, it has been very hard for them to cope up with it.
They have some trauma from
it. So when it comes to their children, they are like very restrictive that, okay, no loans, do whatever you want, no loans.
Yeah.
So that's a kind of risk for the person, the child who is thinking about it at early 20s or something. It's a very huge risk they are taking without their parents' support. So what kind of what kind of mindset they need to develop, or how they can take this kind of risk and move on and look for kind of reward.
Okay.
What it takes to do it.
Again, the parents who are trying to bring up their children, the child has to appreciate. The parents are doing their best. Whatever they are doing for your best.
Yes.
So that has to be appreciated. That has to be understood.
Yeah.
But it has to be understood in their context.
Yeah.
Not your context.
Yeah, of course.
Slowly over time, each one of us has to think for ourselves.
Of course.
And those experiences that bothered your parents, learn lessons from them. What you should say to yourself, what can I learn from that?
Yeah.
Don't view it as a total negative.
Yeah.
View it as a learning opportunity.
Like there are people out there who have taken loans and even finished up later, like forfeited.
Correct.
But then we have to look for the lessons.
The lessons to be learned from that. At least you should not make those mistakes. Okay. Having said that, it is going to bother you that such a thing has happened.
Yeah.
But you have to say that my life is my own. My opportunities are different.
Yeah.
And when I look at an opportunity, I will make sure that I understand the risk in it and only then move.
Yeah.
So as long as you are able to intelligently separate yourself from the trauma of what your parents might have gone through, you will be able to free up your mind to think differently and to think completely, because it is the opportunity in front of you that is important.
Yes, yes.
That
Once we miss, we can.
once you miss it, you may miss it forever. And
Yes.
that opportunity was not there for your parents.
Yeah.
So
There were no same situations or conditions.
cannot be the same. So again, it comes back to something I said earlier. You need to find time for yourself each day,
And
5 to 10 minutes at least, to think about what happened, what should have happened, what could have happened. If you can't find that me time, if you can't be selfish enough even that much, you are hurting.
there's no meaning to life.
Yeah. So that thing is very important. That the investment in yourself has to come from you. Somebody cannot tell you that.
Yeah.
That is important.
So people normally look for somebody like mentor. Nowadays, it's kind of I can say it's a trend. Like people want to do entrepreneurship, they find a mentor.
Sure.
And what about those people who don't find a mentor? Is it very much necessary, or they can analyze themselves and self-analyze and find out? Is it very necessary?
If you are lucky enough to find a mentor, that is good.
Okay.
Everybody cannot be a mentor. You have to find the right mentor also. You have to actually choose a mentor. You have to locate a mentor. And if you can locate one, that is good, because you are now getting, just like a co-founder, you are getting an additional voice to guide you. Having a mentor is good.
So it can be anybody who are
Who
triggering you that
yeah.
thought process to get along with the flow.
Yes, they should be knowledgeable in the area that you wish to venture.
Yeah.
Okay. So that is good. But if you don't have a mentor, if you have not been able to locate a mentor, no need for heartbreak.
Yeah.
Okay. You have yourself, you have your co-founder, you have few of your employees who work. As long as the organization that you have built has a free flow of ideas, where everybody shares their ideas, where you have few meetings, and in those few meetings you're open to ideas, you will learn a lot from there.
Yeah.
So that kind of approach also can work. There are no absolutes.
Yeah. So this works for the students
Mhm.
who are just thinking to start.
Mhm.
So I ask this question so that our listeners would understand, like, it's not absolutely necessary to find a mentor, and they can themselves build up and take some risk, think and build on it, and have some calculated risk so that they can be rewarded later.
I agree with you that you may not be able to find a mentor.
Yeah.
But generally it's good to have a mentor and keep talking to people.
Yeah.
They may not exactly get to keep up with this one, and they may not exactly be mentors, but there are people who will share a nugget with you, share some advice with you without wanting to be labeled mentors. You can always keep your minds open.
Yeah.
Keep talking to people. That would be a generally good advice.
In your view, what makes someone a smart investor or a speculative one? Is it the mindset, the strategy, or something else?
It's a very, very tough question to answer.
Okay.
More than smart, you have to be lucky.
Lucky. Okay.
So you have to be, you are called smart after the fact. Okay. When you are making the investment, you, as long as you are following certain principles, certain parameters, like there are certain people who say, if the P ratio is greater than 30, I'm not going to invest because that is expensive for me. There are some people who say, because the P is high, it means that the company is good, because eventually it must be growing a lot. Okay. Depends.
Yeah.
Okay. But as long as you have certain parameters with which you invest, and let us say you are lucky enough that 2 or 3 of those investments do very well, then you are branded as smart. You turn out to be smart.
Okay.
But you got to be honest to yourself, you got to be consistent, you got to have clarity, you need to be well read. It's like having children. Each stock is like your child. Okay. So you got to work hard on each of those, and then you may turn out to be smart in hindsight. not a priori, not in advance. Okay. So that is or the smart discussion. What was the other kind of investor you said?
Speculation.
Speculation is people who trade a lot. Okay, when you trade a lot, it means you are speculating, you are betting on a horse.
Okay.
So that is the kind of investment I don't understand.
Okay.
For me, an investment is I buy, and unless something about the company changes, meaning some fraud was discovered or something bad happened or market conditions change, this one, I would rather keep that stock high or low, not get bothered, because I still believe in the thesis of the stock. So that is where I would be on the speculation side.
Okay. 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 That sounds great.
Thank you.
You have also spent a lot of time in education system. So, do you think our schools and colleges are doing well in educating financially? What thing you want to he added?
Okay. Uh, Again, a very important question. Um, it is a subject that is taught nowadays in schools, was not taught earlier, but is being so. The governments, the state and the center, they are to be applauded for that. They have made it an important thing to know. Also, there are a lot of good advertisements that are being in public interest, whether it's through RBI, whether it's through the Mutual Fund Association. There
Awareness. Yeah.
awareness campaigns are going on, and we should be proud as a nation that it is being done.
Yeah.
Okay. Now, whether people take them seriously or not, that is something that we cannot help. But I would wish that the education that is given to students who say were in the 10th standard or are in their degree final years and all that, it is a little more involved in terms of not just giving information, but also some testing needs to be done interactively so that some practical knowledge becomes part of you, and simple things need to be taught very well, that saving is more important than anything else. Definitely having fun in life is also very important. We want a 360-degree life, not just only one thing. Okay, so saving is important, and also diversifying. Those kinds of messages need to be
Habits should be
those basic habits need to be inculcated in them, so that once they start doing it, they do it well. That is where I would say the improvement needs to be there. But things are far more different and better now than they were earlier.
I have not.
And the last thing, sorry, I cut you there.
No.
The last thing that needs to be inculcated in people is the days of people working in the same job over 30 years and 40 years, which was the reality of yesterday, is not the reality of today. And therefore, they need to do more to protect themselves. For example, forget life insurance. Having your own health insurance is extremely important. And the younger you are, the cheaper the price of insurance. So better is
healthy.
better to lock in good insurance. Then at a minimum have some term insurance in line. So these kinds of messages should be part of the education and habit forming things that we do for the younger ones.
Why it is important, how they have to do it. And because our parents and normally they don't think that way, because
Correct.
their generation had been.
The realities of that
From home we cannot take it. At least from school we have.
From school we need it, and in today's world, when you are 20 you don't think of life at 80. But whether you like it or not, 80 is going to visit upon you. And at that time, to wake up and not have the finances to take care of your expenses, very painful. So that is why you need to build up a financial portfolio, an insurance portfolio, the right kind of insurance portfolio, the right kind of investments, other than just your home and all of that. These are very important things. And again, you will be the manager of your own finances ultimately. That reality.
We can attain financial independence after.
Yes, that's very important.
So as in how I keep talking to you, I am feeling grateful that I'm on the right path, I can say.
Good.
I'm feeling so good about it.
Good. Good. Continue to be on that path. It is very important.
Sure. People in smaller towns across India, how can they connect with the global opportunities?
Luckily, um,
Like global financial opportunity
y-
without taking much risk or something.
correct. If they are doing their management of their finances by themselves, there is a lot of opportunity to collect information, gather information, and become smart about what you wish to do by yourself. That may be 5% of the population because they have the time and the inclination. For the rest, it is better to go to a financial manager. That may be a management firm, that may be personal advisors. So, all of that you can do. There, you can specify what you wish to do. Invest in domestic, invest in domestic who do a lot of exports. So, that way also you are connected to the global economy.
Yeah.
If there is a company in India that is doing a lot of exports, naturally you got exposure to the global market.
That's
Okay. Then there are avenues for people sitting in India, even in Belgaum, even in Nippani, to be investing globally if they wish to. As long as you and your manager are thinking portfolio wise, as long as you are not doing excessive risk in one particular field, you are in good shape. So, but learning that in principle you need to be diversified across sectors, across stocks, maybe even across geographies. Thinking in a portfolio concept is very right. As long as you do that, today you can be anywhere in India and you can be connected to the right people who and since
we have a lot of connectivity.
and transactions are all electronic.
Yeah.
So as long as you build the trust in that manager, you can go ahead and do that.
Yeah, right, research. If you had to pick one golden rule for financial planning, which applies to from the founder to CEO or from the student to CEO level, what would it be?
Save
Let it go more investing.
save first, na? Only then you can invest.
Okay.
The habit of saving is extraordinarily important and regular, not once in a blue moon.
Okay.
Okay. Oh, I will wait for my bonus. That money I will invest.
Okay.
Okay. No, take bonus money, have some fun with it also, invest most of it. Same thing with salary.
With the ratio kind of, yeah.
With the ratio. Okay. Sometimes you may have certain difficulties where all of the money has to go somewhere else. So that also is very, very important. But other than those exceptions, saving should be a regular. So I would say saving is most important. We have to take care of itself. But
We have been listening these things like saving is most important.
Yeah.
But then we also had that mindset that without saving, I cannot do these things or something like that. Or
Correct.
we need to have a particular amount, like 10,000, say, like for example. So until then, I cannot invest. But nowadays, there are a lot of opportunities where you can just invest with 1 rupee or
at the
something.
smallest amount you can. And remember one thing, we have not discussed this, but I think it's a very important concept that goes along with it. Inflation never goes out of style.
Yeah.
It's always going to be there. So, what is 30,000 rupees today to manage your home expenses without doing anything 30 years from now, 40 years from now, 50 years from now is going to be far more than 30,000. So, you have to save and invest so that you earn a return and also protect yourself against inflation. That is also very, very, very important in life.
Yeah.
That's an aspect that cannot be ignored.
Yeah, right, you said. You have seen markets, financial markets across the world. So, what big thing you think it's coming up for India next?
India is going to be one of the world's largest economies,
In the investments and
which will then flow into the investment world.
Yeah.
The larger your GDP, the greater your economic opportunities. So, whereas say in 1990 we may have been a $500 billion economy, today we are about a $4 trillion economy. And if you go to 6-7% rates of growth, we could very well by 2047, okay, which is not very far off. Okay,
We are already fourth largest now.
we are fourth largest, but that 4 trillion could become about 20-30 trillion. So in a $30 trillion economy, the number of opportunities available for investment are many.
Huge.
So if you ask me, globally, India itself will become a far more attractive, even more attractive as an economy. And once the level of wealth rises, the ability to invest abroad also will become higher. So whichever is the open economy at that time, you could invest there also and increase your returns. So the chance for Indian investors to multiply their wealth within the Indian context is also very high. But eventually, to partake in the global economy, whichever the areas are that are growing, whichever the countries that are growing, also we can partake in. So the canvas for Indian investors is going to get better and better, both domestically and globally. So it's a very good picture, starting with Indian wealth, because it is only when there is wealth within the country then you can invest. No? So
We are growing.
yeah, we are growing, and for the foreseeable future, there is growth, as long as certain policies are properly implemented and all that.
Yeah.
But there is a reasonable probability that India will continue along this path, therefore multiplying the opportunities for a larger set of the population, so that they are protected better when they are old.
So you say now people who are viewing us or listening to us, now is the opportunity they have to take up and start investing so that they can see a better future later. It's never too late.
It's never too late, okay, and it's never too late to learn something new.
Yeah.
And it's never too late to multiply your wealth. So it's a good outcome, and it is in your own interest to learn not everything about investment, because then you cannot, because that may not be your competency and may not be of interest to you. But the basics, picking up those basics,
Just learn about the.
to understand, it is incumbent upon each one of us to be aware of it. Wow.
Sure. So I just wanted to ask you, what is the one significant risk you have encountered in your lifetime, whether it be personal or venture wise?
There are,
Remember something in the early 20s or somewhere like
yeah, getting too excited about a stock and betting too much on it,
oh, okay.
and then losing money. But I'll always say losing money is the best way to learn investment. It was, as a lesson, it was worth it.
Okay.
As a financial exercise, it was not
Worth it.
But the lessons were far more valuable.
Okay.
Again, that is where, even though in class I had learnt about diversification, personally getting too excited about one stock and putting too much money in it was a painful lesson.
It was kind of emotional or psychological decision, you can say.
It was, I can try 20 easily. It was an indecision of youth,
Okay.
arrogance, certainty.
Okay.
All the laws that I am pretty close to now were broken at that time.
Okay.
Okay, but I had to go through that to come to this.
Yes, exactly. So we have to take a particular path to reach.
When you are doing investing individually, you have to learn those lessons.
Yeah.
Painfully, but they were learned.
Yeah.
Hopefully.
To our listeners, they will also learn that making mistakes is
It's very much a part of the investment. This one, but when you do make some investments, don't make it such that it could turn out to be a mistake. So you should always be careful in how much you apportion money to one particular investment opportunity. Be sure that even if it goes totally to zero, you are still breathing.
Yeah.
So
we don't lose up the whole capital we have.
never do that. Never do that. Be careful about doing that. And generally, if you follow those principles, you will be good. Because over time, think about it this way: the whole Indian economy is growing, and if the economy is growing at 6 to 7%, the portion that you are going to invest in the stock market, that portion, because agriculture is a huge portion of our economy, that generally grows at a slower rate, not at the 6 to 7%. The industrial and other the technology stocks and all, they usually are growing at about 12-15%. So you should be in that part of the economy.
Yeah.
Uh, thereby it can be along you grow along with that
With the same speed.
at the same speed, or if you're lucky, even more.
That, that's very nice. Finally, on a more personal note, what does word reward means to you? Like both for life and
Very philosophical question.
what does this mean to you?
Yeah, I think it's an after the fact discovery. If you got a reward or not, those small rewards, when you stand for a elocution competition and you win a prize, now that's a reward. But the rewards are kind of diffused with some sense of accomplishment, with a sense of joy. um, your children, having your children is a great, it's one of the great rewards of life. uh, Being able to come back to India and kind of be linked to a good, comfortable, decent life, that's a reward. Being able to do something for the colleges that I'm part of, that's a reward. And having a life that has a couple of good elements to it, some art, some music, some watching some dramas, reading some books, having some friends, having a small little consulting practice and doing okay there. All of these seems like the reward in life. Being able at the I turned 60 recently, being able to walk comfortably and it's really comfortably, that's a reward. So
On a larger note,
on a larger note, so it's I'm happy with my life. That's a reward.
that's amazing.
Yeah.
That's really amazing. It was wonderful having you here today, and I felt very overwhelmed when I met you, and I was very excited that we'll be speaking up on different things, and you have a lot of experience, and I just hope that our listeners will also get lot of lessons from this podcast, especially.
Thank you.
Thank you so much.
Thank you very much. Thanks for the opportunity.